Ladies and gentlemen, good day and welcome to the Mrs. Bectors Food Specialty Limited Q4 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Bector, Managing Director and Promoter. Thank you, and over to you, sir.
Thank you so much, and good afternoon, everyone. On behalf of Mrs. Bector Food Specialties Limited, I extend a very warm welcome to all participants joining us for our Quarter 4 2026 and Financial Year 2026 results discussion call. Today I am joined by Mr. Manu Talwar, our Chief Executive Officer, Mr. Praveen Kumar Goyal, Whole-Time Director and Chief Financial Officer, Mr. Ishan Bector, Whole-Time Director, and Mr. Suvir Bector, Whole-Time Director. We also have with us our Investor Relations Advisor from MUFG in time. I hope everyone has had an opportunity to review our investor deck and press release, which have been uploaded on the stock exchanges as well as on our company website. FY26 marks a significant milestone for Mrs. Bector Foods. We have crossed the INR 2,000 crore revenue mark, a goal we had set our sights on and are proud to have achieved it. From INR 988 crores in financial year 2022 to INR 2,044 crores in financial year 2026, the company has grown at a 20% CAGR over these 4 years. With that, biscuits vertical grew at 20% CAGR and the bakery vertical at 23% CAGR. These 4 years have been equally defined by the foundations we have built across several dimensions. Over the last 4 years, the company has undergone a meaningful transformation across every dimensions of the business. We transitioned to a professionally managed setup through deliberate leadership hiring, strengthening of IT infrastructure, and benchmarking and execution excellence across sales and distribution. A clear brand and sub-brand strategy was defined to move towards long-term brand equity creation and sharper market positioning, reinforcing visibility and laying the foundation for sustainable demand-led growth. We have made substantial investments in expanding our manufacturing capacity across both biscuits in Rajpura and Indore and bakery in Kolkata, Khopoli and Bhiwadi. These additions represent some of the most significant capacity scale-ups in the company's recent history, strengthening our ability to meet growing demand, support new product launches, and build the operational headroom needed to sustain our next phase of growth. Attuned to evolving consumer behavior, we have been and will be deliberately building quick commerce as a channel of significance. Structured mindset of cost optimization institutionalized through Project Impact. On the international business front, we have steadily entered new markets and geographies. We have earned the trust of partners through consistent quality and reliable delivery, onboarded new customers through channels, and forayed into new countries with a calibrated market-by-market approach. Today, our products reach consumers in more than 70 countries, a testament not just to the reach we have built, but to the credibility we have earned on the global stage. In Q4 26, the company reported a revenue from operations of INR 485.86 crores, reflecting a year-on-year growth of 8.9%. The biscuits vertical delivered a resilient 8.4% year-on-year growth and witnessed a sequential uptick despite navigating geopolitical headwinds from the West Asia conflict. This sequential recovery was partly supported by the GST reforms through increased grammages and reduced MRPs. Though we anticipate this tailwind being tempered in the coming quarter as inflationary pressures from the conflict intensifies, with the raw material and packaging material costs rising and some degree of price sensitivity expected in the market. The bakery vertical recorded 8.5% year-on-year growth in Q4 FY26, with strong double-digit momentum through January and February before the complete shift of the Navaratri season into March tempered the closing month's performance. EBITDA margin came in at 12.7%, an improvement of 25 basis points over Q4 25. On a full year basis, the company delivered a 9.1% growth. The biscuits business delivered a growth of 6.7%. FY26 presented a challenging operating environment across multiple fronts. The year opened with uncertainty surrounding punitive tariffs and closed with pressures of West Asia conflict. In between, the GST 2.0 reforms rolled out by the Government of India, while a positive structural development for the industry over the long term, posed short-term inventory-led challenges in quarter 3 of the financial year 2026. With a discernible impact on domestic biscuit growth during that period, the bakery business delivered a strong growth of 14%. The current environment presents pressure across three key areas: disruption in supply chain and logistic costs within the exports business, escalating crude prices, driving inflation across raw materials, packaging and fuel, and the very recent impact of minimum wage hike across key states. That said, mitigation measures are being actively pursued through calibrated measures and cost efficiency measures under Project Impact. With implementation underway from April 27, the gradual clearing of uncertainty around tariffs has and is expected to provide further tailwinds as we move ahead. While the full impact of inflation-led price hike on consumer sentiments will be seen in the coming quarter, barring the uncertainties stemming from the West Asia conflict, we remain hopeful of a stable demand environment across the categories we operate in, underpinned by stable consumption trends, a continuing focus on premiumization, and sustained investments in brand building. On new product launches, we expanded our health portfolio under Nature Baked, our clean label brand with the introduction of protein bread, a deliberate response to the growing consumer shift towards functional, health-forward eating as more Indians actively seek higher protein in their daily diet. We extended our dessert range with the launch of cheesecake jars under the English Oven, tapping into the growing consumer appetite for premium ready-to-eat desserts experiences and the broader premiumization trend gaining momentum across urban markets. Rounding out the quarter, our Valentine's Day collaboration with Blinkit continued the momentum from our Christmas partnership, where our Danish butter cookies tin reached over 3 lakh households and generated meaningful brand goodwill. On the operation front, we successfully commissioned our Kolkata plant in January, marking our foray into the East and enabling us to serve general trade, modern trade, and institutional partners in the region. We also expanded the English Oven brand into Hyderabad, marking a strategic entry into key growth markets. Our Mumbai plant, commissioned in Q4 FY26, is now in its ramp-up phase and is expected to progressively scale out over the coming quarters. Together, these initiatives are expected to strengthen our presence in the bakery industry across key markets, improve supply chain efficiencies, and support sustained growth through deeper regional penetration. Financial performance. Talking about FY26 financial performance, the consolidated revenues for FY26 stood at INR 2,043.6 crores versus INR 1,873.9 crores in FY25, thus registering a growth of 9.1%. EBITDA for FY26 stood at INR 257.7 crores versus INR 251.5 crores in FY25, thus registering a growth of 2.5% with an EBITDA margin of 12.6%. PAT for FY26 at INR 140.9 crores with a PAT margin of 6.9%. With this, I request you to open the floor for questions and answers. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Nuvama. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the current cost inflation you are seeing. If you could specifically comment on wheat raw material, we have picked up conflicting signals, but most of the studies are saying that this year, although wheat crop was good, there was a damage because of the unseasonal rains. So how much is the current inflation from the bottom in the last 3 months, and how is the overall scenario for the raw material basket currently when you are seeing the petrol hike and all this? So if you could tell us in terms of RM basket, how much is the inflation and how is the wheat raw material?
So in the RM side, there has been inflation, especially which comes from palm oil and crude, and also from our packaging material. So these are actually the three major, impacts which have come in. And other than that, because this will be on the wheat front, we are as per our AOP, we have been, we have done good for this quarter, and we have also quite booked for the next quarter. And the wheat quality, like for our, in the bakery side, our major businesses, part of our business is QSR, we block it for the year. So, our inflations are covered over there. On the biscuit side, where, the grain-affected quality actually only damages certain part of gluten. So biscuits don't require gluten. So, we do not feel that there should be a substantial impact. So if it is specific to wheat. Yeah. So totally, if I see what we anticipate and what we have seen till now, we look at around 3%, impact, which comes in from all over areas, right? Which is including labor, logistics. Logistics is very fresh for domestics. It might come in a bit later. We have not yet got it. But, so that's where we are. And Manu can talk about the recovery, what if you want to know about the recovery also.
Yes. I would like to know.
Yeah, Manu, over to you.
So largely it is coming from the packaging, as Anup said, and it's about 3%, including some of the impact on minimum wages, because there has been minimum wages steep revision in UP, as well as now we're hearing in Karnataka and also. So, but yes, we had taken the recovery actions in terms of pricing and cost efficiency. So we expect ourselves to be covered on this inflation to keep our value addition in line in the H1. So as of now, if nothing further deteriorates on pricing, we should be more or less in line with our gross margin, which is value addition for quarter one. So with pricing actions and cost, some bit of cost efficiency on manufacturing side.
Sure. My second and last question is on biscuits. So 8% growth YOY, 16% growth on a 2-year basis. Are you happy with this performance given you have huge headroom to expand market share in many states? And what will be the outlook on market share in FY27? Second is odd pricing by, say, Parle ITC of 4.5 rupee and 9 rupee pricing, which they had done post GST 2.0. Did that impact you in any way in the branded biscuits in the domestic business?
So answering on your both question, were we happy with the last quarter or last year growth on biscuit? I would say it was a somber kind of growth, and we are looking at doing much better than that in this coming financial year. Be very confident of touching on the biscuit segment somewhere between low to mid-teens kind of growth in this financial year. Things look promising. Last year, both domestic as well as export was impacted. Export impact largely came because of US tariff issues, which kind of clouded around almost the full financial year. On the domestic biscuit side, although GST change was a good change, but it is linked to your second question. The post-GST revision, some of the large players continued at a 450 pricing, as you said, and we had moved to 5 and Britannia had moved to 5. So that definitely had its impact in the last quarter of the financial year, quarter 3 and quarter 4 of the year. But now, obviously, things are settling in terms of rightful pricing by everyone. I would say one of the large players is still into transition, has not fully transitioned, but they have started the transition and everybody is coming to the right coinage pricing. So this year should be fine.
So one follow-up on that. So that odd pricing, was that an aberration because these players have tasted success? So would you be confident that either you or any other player will not go back to 4.59, say when the raw material again turns favorable, or irrespective of that, right? Ultimately, it doesn't have too much to do with raw material. If someone chooses to go to 4.59, they gain market share. So would you be confident that this is just an aberration by the industry players?
Yes, it's an aberration, and I think that most of the players in a rightful manner we went to 5 will be more careful, including us. The next time any grammage increase or decrease, whenever it happens, I would say at least we will be very, very watchful of the competition and which we normally are. Probably this time was a miss because one of the very large players decided to stay at a lower pricing.
Understood. Thank you. That's all from my side.
Thank you. The next question is from the line of Siddesh Deshmukh from IIFL Capital. Please go ahead.
Hi, sir. This is Percy Panthaki here. Just a question on your bakery segment. We have been in the past doing high teens kind of growth on that segment. Even Q2 was 16%, and then Q3 slowed down to 13%, and now it is at 9%. So what is really the reason behind this slowing growth in the bakery segment, and what kind of growth do you think is realistically possible over the next few quarters?
So the only impact was I'll explain to you, we are largely north-based business. This time, Navratri, so Jan and Feb went very well. So Navratri was in March. And Navratri is a time, last year it was in April, so during Navratri, the bread consumption really dipped because in North India, they fast and they don't eat non-vegetarian eggs and all. So that's a seasonal cyclic thing which happened in the last quarter. Is nothing to do with the business trend. So we continue to be bullish. English Oven has been growing at high teens for the last 4 years, and we expect a similar trend to continue on that. On a QSR side, there are some initial good signals after almost 2.5 years. that their consumption is moving up, and we are very hopeful that trend should continue. So on the QSR side, we expect a low teens kind of growth in this financial year.
And bakery overall should also be at a low teens kind of a level?
Overall, as a company,
Bakery.
No, bakery.
bakery will be at a mid-teen kind of level on overall basis.
Understood. Secondly, on margin, given that we are seeing inflation in a few commodities, how do you see your gross margin and EBITDA margin for the overall company on a YOY basis for the full year?
So, you must appreciate that the situation remains very, very dynamic, and the way pricing is volatile, literally on a quarter-on-quarter basis. But based on whatever is the pricing and whatever the war impact, which we just stated is close to 3%, we have taken actions to cover it up, right? So we should be able to cover it up to not impact us on our margins negatively on EBITDA margin side and also on the gross margin side. But if something very volatile happens in future, we will take certain actions, but I won't be able to comment on that. But as of now, whatever impact has come in inflation because of war, we have taken due actions to cover up that impact. And so as we told last time also that we will be working towards improving our EBITDA margins. And so as of now, we are fairly optimistic that, quarter on quarter, we should see an improvement in the EBITDA margins side.
So would it be fair to assume that unless, let's say, crude suddenly spikes up again above 100, we should at least be maintaining EBITDA margins on a YOY basis?
Yes, we should be maintaining. Yes, unless until the crude kind of breaks the roof. And in India, if you look at India, the oil prices have started going up only recently, and there has been, I think, 4 or 5 revisions in the last 2 weeks' time. So it will have a laggard impact on the inflation, right? So if you ask me, I see the impact of this to start showing somewhere in quarter 2, right? And that's what on the logistics and other side, because logistic cost is something fundamental base to everything which gets moved. So, but yes, as of now, whatever has happened, we have covered ourselves. And we will take all necessary actions. We will take all necessary action to be, to do our best to cover up the future cost impacts also.
And last question, if I might squeeze in on the biscuits portfolio, could you just tell us, like without specifying any numbers, if that's a problem, like which are the 2 or 3 states which are sort of growing significantly above average, and which are the 2 or 3 states whose growth is lagging versus the average in the biscuits portfolio, not just for this quarter, but let's say for FY26 as a whole?
So, you see, our growth, okay, let me explain to you how are we driving. So we are driving our distribution primarily within 400 kilometers of our north plant, which is in Rajpura, which is Punjab, and that will be the large source of growth for us. Secondly, as our MP plant, Indore plant, Dhar plant has come up, so we will be driving our distribution in the central India and some part of western India. So that will be our source of growth. So these 2 will be source of. So within north, of course, we have a higher share in upper India. So large part of source of growth will be lower part of north.
Okay, sir. That's all from me. Thanks and all the best.
Thank you. The next question is from the line of Soham Samarthan from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity, sir. I just wanted to check on this quarter biscuit number. So we have we grew 8%. So within 8%, what is the bifurcation in export and domestic? This last quarter, export was a low single digit. So how is the export market doing right now?
So export was again low single digit even in this quarter, right, in the quarter four. But yes, things are optimistic and things are looking brighter now. And you should get to see good growths in both export and domestic in the quarter one, quarter two.
So again, export will grow. What is our target? Mid-teens kind of a growth do we take for FY27?
Mid-teens kind low to mid-teens kind of growth.
Last quarter, if I'm not wrong, challenges were these competitive pressure from Latin America and all. How is the competition right now over there?
So it was, you see, it was not a competition kind of issue. There was a issue on account of local competition creating a regulatory and duty pressure on us. So we have collaborated and taken help of our Commerce Ministry and External Affairs Ministry. Rather, our export head and director, Suvir Bectors, wasn't there. So he just returned it from there, having meeting with the Indian ambassador as well as Dominican ambassador to India. He was present in that country. So these efforts are now giving some positive results, which had created pressure in the last financial year. And we're very hopeful that with all the efforts by the Commerce Ministry as well as External Affairs Ministry and by us and our partner there, should resolve this problem, and we should be able to grow well in this territory in this financial year.
Okay. And the next question on English Oven, last time we spoke, our target to we are catering the market like Chennai, Hyderabad and all. How we are looking this market as of now, or what is the traction over there right now?
I would request Ishan to take up this.
Yeah. So, so we have launched Calcutta and we've launched Hyderabad. I think the response in Calcutta has been fairly good. On QCOM, I mean, we're already reaching a high single-digit market share. So, clearly showing that brand acceptance is there. I think we're also making strong inroads into GT, into general trade. Hyderabad is positive, however, slightly muted compared to Calcutta. Right now in Hyderabad, we're going to be focusing largely through the QCOM segment, as we set to establish the brand in the market, followed by then getting into general trade. But we're very hopeful of these two markets adding to our portfolio, because as we scale, success in not only these two markets but a further couple of markets is going to be very important for the growth of English Oven.
So what are the next couple of markets we're looking?
So see, we've been getting a good response in Punjab as well, right? We will further make inroads into Punjab. I think Chennai will be another market that we will look at. If you ask me where the biggest opportunities for English Oven are at the moment, I think our biggest opportunity still is Mumbai, right? I think we still have a low market share. I think the new plant that is coming up is going to really unlock supply chain inefficiencies that we have at the moment, as we are very largely dependent on co-packers. It's been, and we are very hopeful that this new plant is really going to bring in that supply chain efficiency, cost reduction, but also, significant improvement in quality. So I think if you ask me, in Mumbai, we can 3x from where we are at the moment. So So I would say that Mumbai, Calcutta, and Hyderabad scale up, and then maybe a Chennai or Ahmedabad.
Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Ronak Shah from Equirus Securities. Please go ahead.
Yeah. Hi. Thanks for the opportunity. So my first question is regarding the export incentive. So last few odd quarters, there is a hold on the export incentive. So is there any update on that? And secondly, the management was trying to offset that via few initiatives. So what are that initiative? Are there any benefit coming from that aspect?
So, on the export incentives, we are pursuing with the government and on a restart of the incentives, but still the file is in progress. I think probably with certain amendments, they might be bringing out the file, but nothing concrete as yet. On the import side, we had evaluated certain possibilities, but have not been able to fully utilize direct import, other than we are importing some, whey protein, like whey powder, not protein, whey powder. So which is being used in the biscuit side. But other than that, this is still, I think we are pursuing with the Ministry of Food Processing and to take this forward.
Mr. Ronak, I will just add further to that you asked what we have done in the business, export business, is that we have worked on our cost efficiencies as well as on pricing with customers. So we have moved well in terms of covering that part of the FI incentive partially. And while we continue to pursue for that incentive, rather there was a ministry and roundtable just about 3 days back with the Secretary of Food Processing, and we have taken up with them. But yes, we have worked on cost and the pricing to cover up quite a bit of that impact.
Understood, sir. Now, second question is on the Project Impact 1.0. So it's been last a few odd quarters when we have implemented. So are you seeing any quantitative benefits which you can highlight to us? Because if we see last 6 odd quarters, your margin is largely into the range of 12.5% odd. So can you highlight what are the benefits you are yielding right now, and what can be the trajectory going forward?
So, Mr. Ronak, this is now Project Impact, which we started 2 years back, has become an annual where when we do our annual plan, we do make cost efficiency. And last year, this impact had a fairly decent good results for us, both on the manufacturing cost side, some bit on the supply chain side, and some bit also on the S&D side, right? These were the 3 areas where we kind of worked on, and also on the recipe rationalization side. So this year again, we had made a plan, and we review it on a monthly basis, which is definitely, as I told you in case of exports also, that through the cost efficiency, we will be covering some part of the impact of the FI. So this program is certainly running fine and building up in terms of defining the target for cost savings and then monitoring them on a monthly basis to ensure they are fulfilled.
Got it. And sir, lastly, on the distribution fund, so we have realigned strategy via focusing more nearing to the plant vicinity. So now if we see the throughput per store, how you are seeing the changes in trajectory? And secondly, in terms of the overall distribution expansion, how you are now revisiting your earlier targets in terms of the direct and the overall reach?
Yeah. So what we are planning for this financial year definitely is that we are going to take our build outlets, which we track, and we were around 320,000. So that we are targeting to take it up by 40,000 outlets in this financial year. and keep building it up, yes, our focus, as I said earlier, would remain within 400 kilometer of our plant.
Okay. And in terms of the overall reach, what is the current status, and over next 2 to 3 years, how you are aiming for that?
You see, I would say that we in North India are around 35% weighted availability as per AC Nielsen, and our reach is around. So objective over the next 3 years or next 4 years rather, till 2030, would be to take this weighted availability between somewhere around 40 to 45%. So that should be the target, which also would mean that in terms of outlets, which all over India, we are around over 700,000 outlets available. So we should get somewhere between, 900,000 to 1 million outlets. But yeah, large focus will always remain on the weighted outlets, because that's what we want to achieve, take our weighted availability to up by 15 to 20% over 4 years.
Understood. That's it from my side, sir. Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask question. The next question is from the line of Lokesh Manik from Valorum Capital. Please go ahead.
Yes. Hi, good afternoon, Anoopji and team. So my question, just had a clarification. In the frozen food segment, when we are supplying to a lot of cafes.
Sir,
Yeah.
Hello. Sir,
Yeah.
the line dropped. I'm just connecting.
Okay.
Yes, we have connected with the management. Yes, sir, go with the question, please.
Yes, good afternoon, Anoopji and the team. So my question was on the frozen food segment. So just a clarification here, when we say that we are supplying to small cafes, are we supplying the bread itself, or we are supplying the finished products, in the sense that even the ingredients we are making and the sauces and everything, it's the finished product that we are supplying? Just a clarification.
So it's a mix of both. So in some cases, we supply raw dough, which is not like a baked bread. In some cases, it's a baked bread. And in some cases, like, we have products like toasties, which also have sauces and cheese and veggies on it. But so they are not procured from outside. So it's not like we are manufacturing the sauce or anything. I mean, it's all procurement. But it's a mix of ready-made sandwiches and.
Okay. So how do you see the growth now going forward here? Because this is a very interesting segment, given that your association with a lot of QSR players, you also help them come out with new products on their menus, which you can leverage, towards these small B2C outlets. So what is the thought process here, strategy here to scale this part of the business, which looks very interesting, as a future growth driver?
See, as I would say, we are upgrading our facilities. So with the new bread plant, which is coming up in Khopoli, right? We are also talking about setting up the Bangalore facility. Our idea is to have each plant which can do burger buns, breads, and value-added products. Now, those value-added products could be frozen dough. It could also be sourdoughs, right? In fact, in our north-based plant, we have just, increased capacity for sourdough breads in the market, right? So, at the end of the day, our focus is on value addition. I think through the Q-commerce space, now we are playing not only on the B2B side, but also on the B2C side, on all these categories. So you can see that we have a frozen range of products, which are available on Q-com in Delhi NCR. We are seeing month-on-month growth there. Sourdoughs is something where we always had a capacity bottleneck, actually, right? So With that happening, that is going to bring value addition onto our English Oven brand as well. So, as these bakeries come up, I would say that, in the, let's say, coming quarters or coming years, we will get a fair sense of how much capacity is needed in each of these businesses. But what is very positive is that we understand the business. We already have a proof of concept. We're already selling these products in the market. So we've already started building our relationships with our customers, both on the B2B and the B2C side, which gives us a lot of confidence that as volumes ramp up, we are able to scale quickly.
Great. So just if you can give us a sense from a perspective that, today value-added products will be what percentage of revenue for bakery or console, whichever is, convenient for you. And what is the aspiration to take this, let's say, 4 or 5 years down the line by FY30, if that's the vision?
See, how we look at it is we look at, let's say, our premiumization, that we look at internally. So we are at about 56% premiumization on the English Oven front. Like Nature Baked, right? Nature Baked as a business, as a new brand, I would say at the, it's become quite reasonably accepted in the market. And, we'll be touching like an ARR of almost 10 crores for a new brand, right? And we see it scaling up very quickly. So our focus on premiumization is going to continue, right? I think Nature Baked has seen very, very positive movement towards the clean label side, sourdoughs coming in. So I think our target more so than is, how can we bring this premiumization to, let's say, 65%, so see positive uptake quarter on quarter on these metrics.
Got it. That was very much helpful. Thank you so much. That's it from my side.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to 2 questions per participant. Do you have a follow-up question? We request you to rejoin the queue. The next question is from the line of Achal Pal from Monarch Network. Please go ahead.
Yeah, hi. Thank you for the opportunity. So I have 3 questions. First, how much did the export business grow on a full year basis? And second question is on Khopoli plant. So just wanted to know what is the current utilization rate, and have you commissioned second production line or any update on that?
So
Yeah, I'll take Manu, you start, okay, then I'll follow it up. Okay.
So export growth last year was in single digit, right? So that was the kind of growth we had. On a Khopoli, Anup can update you.
Yeah, so Khopoli, our bun line has already been commissioned and is already, has started. So since it's a very large line, we are a little bit, we are yet working with our equipment suppliers to, have it fully, commissioned in the right manner, because a major part of the equipment comes from abroad. On the bread line is nearing completion. I think within this quarter, we'll be rolling out products end of the quarter. And so I think we are in tune. We are in line with everything, yeah.
Okay, so any number if you want to quote on the utilization rate, like what is the current status?
Utilization, because right now, currently, on the utilization side, we're running both the lines. We're running our old line also, we're running the new line also. You understand? Okay. So whenever we find a small defect, we pass on the line to the team. Okay, now, because we are running the line, for, substantially, but whenever there's a need, we have to pass it down, right? So we're running both the lines. So it will not be very fair, to tell you exactly percentage, this is the percentage, but the line is well commissioned. It has come out beautifully well. It's a very automated line, and in fact, we would once, in the probably after the monsoons now, because Khopoli gets lots of rain, we would definitely, invite you all to the facility. It's one of the best facilities in not only in India and probably, a lot of many other European countries too. So we will not be able to specify today. It will not be fair on me, but on utilization, it will lead to a substantial utilization because also, QSR numbers are also growing now and they're more positive. So I think it'll be very fair. So right now, it will not be right to give you the number right now.
Okay, okay. My last question, in this quarter, we have launched our English Oven jar dessert. So what kind of traction we are getting for this, and which are the markets we have launched it?
So currently we are focusing only on Delhi NCR. Blinkit has been our launch customer, but we have 2 or 3 customers who are following up with us to launch the product with them as well. We have also made a small investment for a line, automated line which can increase our capacity for doing jar desserts that can be leveraged not only in B2B but also in B2C. So, right now it's still small scale, but from what we have looked at, the unit economics are very positive. In fact, even with a limited supply chain, we have cash flow positive in this business. So I think as our capacity increases, not only will we be more bullish on B2B but also on B2C.
Okay, okay. Thank you so much.
Thank you. The next question is from the line of Rohit Harikal from Aditya Birla Money. Please go ahead.
Yeah, hi. Thank you. Thank you for the opportunity. My question is on the biscuits export business. So with US tariffs having reduced from peak levels, so are we seeing order volumes come back for this business?
I can take it up. Hi. So, yes, the tariffs have reduced substantially. So, we were actually visiting the US a week back. We've discussed a lot of potential new business with clients, and with the reduced tariffs and India's good relation with the US, customers are already onboarding us on some new projects. So I think it will be a great start with a couple of new retailers and new projects going forward.
Mm-hmm. And this low single-digit growth for Q4 in exports, was it because of the West Asia conflict, or even the US contributed to the lower growth?
It was a bit of both, but a lot of influence was there from the US tariffs, because at the peak the tariffs were at 50%, which made it hard for a lot of importers who were importing our brand or their own white labels. It made them harder for them to change the price point for the consumers. So that had hampered the business a bit. But now we are seeing, like I mentioned, a positive trend for it to go forward. And we had a little impact also because of the US and Iran conflict going on.
Mm-hmm. And for the H1, so some of this impact should continue, right? From West Asia and US to ramp up. And then in H2 we...
So a bit on the West Asia, minor impact will be there, but we are already finding other avenues of growth in other territories, and we are still working on building the volume. In the GCC region, only majority 2 of our markets have been impacted, which are Bahrain and Kuwait.
Barring that, we are still able to deliver our shipments into the UAE, Saudi, and Qatar through the Saudi. So, our teams are actively working on finding solutions to still deliver the goods in the market and being very competitive at it.
Okay. So for FY27, mid-teens kind of growth, can we expect or like close to double digit?
I think as a
exports
CEO mentioned, our target is a low to mid-teen growth coming in. So that's our target as of now.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Darshit Vora from SHC Mehta Institutional Equities. Please go ahead.
Yeah, hi, am I audible?
Yes, sir.
Yeah. So thank you for the opportunity. And I just wanted to add that, in the previous phone calls that we've said that we are starting, we were aiming to start to get towards the 14% kind of EBITDA margins by H1, and then for the full year, more than 14% EBITDA margins. So given the prices that you've done and considering that there is no further, raw material inflation from here onwards, do you see that to be something that is achievable, or are we slightly downgrading that kind of thing?
As the situation stands now, as I said that we should see improvement in our EBITDA margin quarter-over-quarter. So quarter one, we should see improvement over quarter four, and quarter two also we should see improvement over quarter one. Objective is to get as close as possible to 14, but you must appreciate the kind of disruptive inflationary impacts which have been there, which we have done our best to cover up. But yes, as of now, where we stand, we should see improving our EBITDA margin both in quarter one and quarter two.
All right, got it. And finally, would it be correct to say that our domestic bakery English oven has grown in early double digits?
Pardon, sorry?
Our domestic retail bakery has grown by early double digits?
Yeah, they have grown in high teens, yeah.
All right. Okay. Thank you so much.
Thank you. The next question is from the line of Abhishek Mathur from Systematic Group. Please go ahead.
Yeah. Hi, sir. Good afternoon. Thank you for the opportunity. On the biscuits business, just wanted to check what is our sales salience of the rupees 5 and rupees 10 packs currently in our portfolio. And related to that, do we also maintain certain forward covers in certain key commodities such as wheat or palm oil, something like what the market leader does? That's all I wanted to check. Thanks.
Okay, I'll just quickly tell you on the percentage of 5-10, which is about 65 to 70, around 65 odd %, which is fairly in line with the industry. And I'll hand it over to Anup to brief you on the commodity future cover.
Yeah. So, we would normally, if you ask me, is there a strategy, to hedge for a particular time? Currently, no. But wherever we feel the situation needs hedging, we definitely do hedge. So like in case of wheat, we would hedge wheat flour. So in case of sugar, when we feel that sugar prices, we can climb up till a particular type of month, we will hedge milk powder. We normally, we hedge. So edible oils, we also hedge. But how much are we hedging, or, what has been our, hedge at the particular time when prices have gone up or gone down, is actually it's not, to be disclosed. So, but as a hedge, we definitely see to secure, our time. So in case, wheat harvest is in April or early March, so we will see that, we are hedged depending on the wheat crop. So this year the wheat crop has been good. So our hedging would be restricted, for particular quarters, right? Last year they said what we felt was that there was a wheat shortage. So because the year last year we saw a lot of inflation. So so it all depends, very situational. Yes, whenever there's a need, we definitely work towards hedging.
All right. So that was helpful. Thanks and all the best.
Yeah.
Thank you. Ladies and gentlemen, due to the interest of time, this will be the last question. I now hand the conference over to the management for closing comments. Over to you, ma'am.
Hello?
Yes, sir. Over to you for the closing comments.
Okay, sir. Yeah. Thank you everyone for joining us. I hope we have been able to answer all your queries. In case you require any further details, you may please contact us or MUFG in time, our investor relation partner. Thank you so much.
Thank you. On behalf of Mrs. Bectors Food Specialities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.
Thank you.